New traders should stop trading lower time frames. Stay tuned. Hey traders, warm welcome to you. Right, so new traders should stop trading lower time frames. It's not me saying this. This is Peter. You might have seen Peter. Did an interview with Peter, how many years ago was it now, in the office? Great guy, friend of mine, trades on higher time frames. We are complete different ends of the spectrum. In trading, he trades exclusively currencies, high time frame stuff, holding things for thousands of pips. He does take short-term stuff, but never goes down to a 5 minute or anything. I like to trade different instruments, generally US equities, indices. That's my thing. And I will go lower time frames. So I will sometimes day trade, sometimes hold for 2 or 3 days. That's kind of where I am at the moment in my trading career. I've traded very, very short time frames before. I've never really gone down as long, right up to Peter's time frame. But the point is this, is we get on great, we talk about trading, but we trade completely differently. He's a very good trader. I consider myself a very good trader. It works for us. And he's the type of guy who literally will virtually grab you around the throat, slap you around the face and say, hey, stop doing this, stop making a mistake, do this and report back. And that's great because that's, effective for a lot of people. They go, right, yeah, okay. One of the things he said on the last call was this, and Peter likes to do this, great guy. He goes, if I had my way, I would ban new traders from trading the lower time frames. And everyone's laughing. And yeah, really I would, because everyone kind of goes and do scalping and this and that. And yes, it's Peter. Peter says this kind of stuff, but there's a certain amount of truth to that. When he says it, the things he says are from experience, lots of screen time and stuff. And also we see a lot of traders in the group as well. The trouble with the lower time frames is it's very, very challenging. Now, let's just add a caveat here. Absolutely, there is money to be made in lower time frames. That's not what's being said here. There's opportunity there. I think there's a very good opportunity in reading tape. There's a very good opportunity in reading price action. Absolutely, you can carve out an edge in the lower time frames. There's no doubt about that. But if you're brand new to trading, consider starting on the higher time frames, finding your feet before you dial it down, rather than starting on the lower time frames, the 1 minute, the 5 minute, scalping away, day trading away, and then going up. Consider scaling it back and just calming things down a bit. Why? Because the lower time frames firstly amplifies emotion, amplifies your emotion. What does that mean? If you lose intraday, you get frustrated, you get angry, you can start doing stuff that's a danger to your account. You start doing stupid things, you start swinging for the fences, you start doing all the stuff you don't want to be doing. If you're on a higher time frame, that might occur over a period of a couple of weeks, in which cases, yeah, you're still going to be annoyed that you lost money and made those mistakes if there were mistakes, but it's not going to be so emotional. It's not going to be so angry. It's not going to be so, you're not going to potentially do so much damage to your account. The other thing is it puts you on the spot. So you've got to make your decision quickly. Lower time frame, bang, I've seen my trigger, I need to get in now. For a 30-second delay, 10-second delay, I'm missing the fill. And it puts a lot of pressure on you. Now, like I say, if that's your strategy, that's your setup, that's your edge, absolutely you can carve out an edge like that, absolutely. And it suits a lot of people. But if you're new, that pressure, that kind of, I need to make a decision now, and then if you're a bit late to it, it ruins the risk order ratio, is too much to handle at the beginning. Step back, give yourself the time. You've got an hour to make a decision, a day to make a decision. That's a much easier, more comfortable place to be. Third thing is easier to go on tilt. So tilt is when you go crazy. You do a maximum size, you're long, you're short, you're just desperate to get your money back. That rarely happens on the higher time frame. That can, but it's less likely to because the emotions are dampened a little bit. You've got time between trades. If you have you missed a fill and you get stopped again, you just missed an entry and it went without you, all these emotional things, you get angry all of a sudden, right, I need to get my money back. Revenge trading, tilt trading damages accounts. And if you can eliminate that as a beginner trader, new trader, that puts you already on the front foot. That puts you ahead of the curve already. The other thing is you lose money quicker. If you're losing money, which new traders do, we all lose money when we start trading. Very few exceptions. I don't know anybody. I'm sure there's someone out there who says, hey, from day one I made money. Fine, that's great. That's the exception to the rule. Most of the time, as a new trader, you will lose money. I did. Every trader I know who's been in the business decade plus had a spell of losing at the beginning before they finally found their edge. They finally found a strategy that worked, got some discipline, got all the other attributes you need, and started to slowly make some money, and then kind of accelerates up from there. Is it a straight line? Of course it's not. Of course it's not. Would we walk around billionaires if it was you could compound your interest and just keep going all the time? It doesn't work like that. You get to a point, then you pull back, you get to a lower point, you get to a place where you're comfortable, like, yeah, this is good money every year. Then you push a little bit harder, a bit more, a bit that, back and forth. That's the life of a trader. But the point is, everyone loses money at the beginning, or most people will do. So if you're trading very, very frequently, you're going to lose money more frequently. You're going to loser, as opposed to that happening over maybe a quarter of the year or whatever it is, in which case you can learn more, you can calm down, you can relax, you're in the game longer. The longer you're in the game, the more likely you are to succeed. The final thing is, don't have a good grasp. What do I mean by this? So trading most active when you know the least. And that's what you're doing. So you're trading the most active, the most risk theoretically, because you trade, risk, when you have the least amount of knowledge. When you're beginning, you have the least amount of knowledge. So it makes sense to not do that when you've got the least amount of knowledge. And again, guys, we all think we're professional traders right from day one. And hey, I've been there, done that. Thought I knew everything right at the beginning. Of course you don't, and you get smacked. You're like, well, actually, the P&L would beg to differ. So yeah, just being aware of that, just saying, okay, listen, I'm not very knowledgeable. I don't know a lot. I've got a lot to learn. Why don't I trade less frequently? Less risk, less frequently. The market will take a tuition fee, but the good news is you can decide how much. That could be 500 grand or it could be 5 grand. You choose, depending on what size you want to trade. You may think you can go in there and think, I've got £500,000 to spare. Great. The market will take that and more. It will take $500 million if you've got it and swallow it up and say, thanks, there's your tuition fee paid. Now you can learn to trade. Now you learn how to trade. Now you can start to make some money. So pay the least amount of tuition. Stay in the game for as long as possible. Trade the least amount of size possible. And if you go with Peter's advice, and I think this is good advice. I think if you're a brand new trader, start off on the higher time frame. It doesn't mean to say you can't go lower, but if you start off there, get yourself bedded in, understand price action, find out what your setup is like, find out what your strategy is like, get a feel for what you're good at, what you're weak at, all that kind of stuff, and then go a little bit more aggressive. I think that's a better path than going straight into being aggressive. Not to say you can't do that, but I think I'm probably not as passionate about that as Peter is, but I think it's a great suggestion. I think if you're a brand new trader, consider it. It just slows things down, calms the process, take a step back, dampens the emotions, reduces the risk, gets you settled in. If later on you want to dial up the frequency, then yeah, hope that video is of some help. Get your risk managed. Take care. Bye-bye.